Hey guys, TommyBryson here, and I told you guys I read all the comments. So when Chris told me, Tommy, I got $10,000, what should I invest it into? I said, I'm gonna make a whole video about that and use $1,000 because basically, whatever I would do with 10,000, I would do with 1,000 or even $100. It doesn't really matter unless we're talking about in the billions of dollars. That's a whole different game. But a million, 10,000, 1,000 is basically the same exact game. So in this video, I'm gonna talk about basically, hey, is Netflix or Disney or Apple good investments right now, since right now they're basically down like crazy? On top of that, how to make sure you don't lose your money, and most importantly, Tommy, what are you doing with your personal money right now and what are you investing it into? And don't forget, the main job of an investor is not to lose money. This is the tool to our job. So if you lose this, you lose all possibilities to actually be able to make money. You never want to lose that, okay? So preserving capital is the most important part. Never risk this on something you don't understand, because if you lose this, you're out of the game. Never, okay? And by the way, I really do read all the comments. So when I found out that basically all of a sudden now I'm gay, I was like, oh, I didn't know that. So it's interesting, okay? I read all the comments, not a good thing. But, you know, every now and then you get some news that not even you knew. But there you go. Who cares? It is the internet. And as always, guys, smash the like button. And if you're new here, subscribe to the channel, hit the bell so you're notified. And because this channel in some way is going to make you money or save you money. So overall, here's the sauce. Right now, Netflix is down 70% in the past year. Disney is down 40%. And on top of that, Apple is also down around 20 to 25%. And by the way, Netflix is missing earnings, meaning, hey, guys, we thought we were going to make this much money, but in reality, we made less money than our prediction, and that is not a good thing with investors, because it might show, hey, this company is slowing down, we got to get out because it's actually not going to make as much money as they said they were going to make, and that's not a good thing. And then Disney, by the way, I went to the movies to watch, for example, Buzz Lightyear. I love watching cartoons. I love the movie, but there was some weird stuff in there, and I was like, yo, this is a kid's movie, like what's going on here, right? But there's a lot of stuff going on at Disney, okay? So the money is down. And they also have very small profit margins, which is kind of crazy. But also Apple, although they're beating their earnings, saying, hey, we thought we were going to make this much money, but we made a lot more money, okay? But then in reality, their profit margins are shrinking, which is not a good thing either. But can it support that? The answer is probably yes. So how do we find out if these right now are good investments because they're basically down a lot of money? Well, the answer is simple. So I'll tell you what I used to do. What I used to do was basically, I would go right here on Google, type in Apple stock and find out, hey, in the past year, this stock has been down 25%. I would also go to Netflix and find out, hey, in the past year, it's been down 70%. That's kind of crazy, honestly. And then Disney in the past year is down around 40%. That's also crazy. But I would also say, well, that might mean that right now, this is selling for a discount, right? That's the whole idea. And I would say, well, this company has over 166,000 employees. Netflix has around 11,000 employees. And I'm like, why do they employ so many people to just like do this stuff? I don't get it. But then Apple has around 154,000 employees. And you might think in your head, logically speaking, like this company is so massive, is so well known, it makes so much more money. Like, how is it possible it could basically lose everything? It's definitely at a discount right now. I gotta buy, get in right now. But then in reality, you think back into history and say, well, Sears was a big company with a lot of employees. Blockbuster was a big company with a lot of employees, and they still went bankrupt. They still lost everything. So that is not a good indicator if it's at a discount or not at a discount. Now, another thing I would always do is basically, I would say, well, let's take a look at, for example, Disney, okay? And I would judge back, hey, let's go back a year. Well, not a year, right? Let's go back 5 years. And in 5 years, you kind of see a little bit larger of a pattern. You see, for example, stability, some ups, some downs, and then some really high ups, okay? If you go to Max, and you're kind of reading this chart, by the way, and by the way, whenever you look at a chart, it's just to see history and to see points in history. It's not to make predictions on what's going to happen in the future. That makes absolutely no sense. Whatever happened in the past is not a prediction by itself of what's going to happen in the future. So I don't read charts. I use charts and history as to formulate ideas of what might happen if those occurrences occur again. So 5 years ago, the point I'm looking at here is pre-pandemic, okay? So pre-pandemic, February 14th, which by the way is Valentine's Day, you know what I'm saying? Got a little heart on me, you know what I mean? You know what I mean? Yeah, it was selling for like around $140. And pre that, it was at around, for example, like 113, 115, you know, like around that price, but it did go up. But once the pandemic basically hit, we had this massive crash. And by the way, was it justified? Well, think about it. Disney is a company that, yeah, they make movies, they own Pixar, they own all this stuff, great stuff, right? But overall, they're also a company that has parks. And these parks, if no one can go out, the economy is closed down, they're obviously not going to make any revenue and they're going to lose a lot of money. It's just common sense. So in the way, it's kind of justified. They're going to lose money, but they also had other revenue sources like Disney Plus to actually get them some more money too via subscriptions. But overall, it went all the way down to $85. From $140 to $85. That is a big down, right? That's around like a $55 less. But then what happened then was basically, remember, now we're in the pandemic. We had post-pandemic 140, then you had in the pandemic almost like at around 85, and now we're looking at what's happening inside of the pandemic all the way through. What happened was the Fed injected a bunch of money into the economy in order to not have the economy go into a natural depression, which it was supposed to go into, because if the entire recession, because if the entire economy is closed down, how does anything work, right? So by injecting money artificially into the economy, you kind of stop that from happening, but you also worry about inflation. So while you have all this money on the street and there's really no money being made here, the company went from $85 all the way up to not its original price at around $140. Nah, it beat that. It went all the way up to $181, also to $200 almost. Like 197 was basically like the max or whatever, but then it was kind of like all the way there, and that's kind of crazy, right? And then you gotta ask yourself, well, Tommy, what is the value then of Disney? Is it, for example, 140? Is it 85 at the bottom? Or is it, for example, the new price at around 183? Or is it, for example, the new current price at around 195? Okay, you have all of these questions. You have the pre-pandemic, almost pandemic starting, during the pandemic, and then almost like post-pandemic, although we're not fully done. So what is the true value here? And by the way, you can do the exact same thing, not just with Disney, but also with Netflix, looking back in those 5 years, basically, what happened during the whole thing, right? You can also do that same thing, for example, with Apple, what happened during that whole thing also, post-pandemic, pre-pandemic, and all this stuff. And by the way, whenever we use these examples, it's just to view, how can a company handle adversity? Can they handle it? If things were to go bad, do they have enough money, enough profit margins to basically be able to lose a little bit more money, but still be able to sustain the entire business? So now, what is the true value of these companies? The answer is you can never use the stock market and the price it used to be as a tool to tell you what the value is, because the stock market is not a weighing machine. Now, what that means is that basically the price you see is not equal to the true value of the stock, meaning that not every stock that has a price is actually worth that much. That's the idea. The stock market is a popularity contest. It is a voting machine where a group of people like you and me can go and say, hey, we believe Netflix is going to make a lot of money. We think Apple is going to make a lot of money. And the price basically explodes. Not because it's worth more money, but just because we're investing so much money into it. So price is never the way that you make a judgment on if something is basically a good investment. What you would do and what you should do is you don't go, for example, and say, hey, the price used to be 5 years ago $60. Now it's $137. So imagine 5 years from now it's going to be so much higher. Don't do that. That's not how things work. What you do really want to do is you want to go here in the financials, and not even just here in this financials right here, because it's not enough, honestly. It's not just about revenue, not just about net income. It's profit margins. By the way, they're very great over at Apple, and operating income and all this stuff. It's not just about this, but it's also, for example, hey, what is the balance sheet like in this company? What does this company own as assets? How much debt does this company have? Okay, what does it owe money on? How is it raising most of its capital? Is it via bonds or is it via like stockholder equity or whatever? What is its income statement? You know, you can have a company that makes $1 trillion, but if it spends $1,000,001,000 to make that money, it's a trash company because it spends so much more money to basically make money. It makes no sense, okay? And then you also have the cash flow statement. And that shows you, hey, you're making all this money, but what are you actually doing with the cash? You're investing it into trash. You're losing the money. It's not going anywhere. You're not left with anything. All these statements paint a picture to what the actual value of the company basically is. So that's the idea. So the whole point is, if you want to learn about investing, I'm going to recommend 3 books because I can't tell you in one video, hey guys, this is a good investment or that's a good investment, because if I did that, okay, and I believe, for example, let's say I believed, hey, this whole thing with Disney right now is a great opportunity to put in, for example, $10,000 or $1,000 into it, right? And I put my money into it, you put your money into it, the price goes up, I sell, but then you don't sell because you don't know when I sold. Or maybe I sell before that because I changed my mind about it. But how will you know? The point is, I'd rather you know how to do what I do than you just believe everything I say and just do it because I'm doing it, right? That's not what I want you to do. So if you want to learn about investing and what companies to pick, I'm going to recommend these 3 books. First book is going to be One Up on Wall Street by Peter Lynch. Here's a picture of it. I don't have a solid copy. I did the Audible version of it. Over 5 times. I love that book. Second, The Intelligent Investor by Benjamin Graham. This book right here is going to help you out a lot. Thirdly, you also have Value Investing by Benjamin. Well, it's from all of these names right here because it's like a lot of names. I can't really tell all these names, okay? But this is also a great book, and I would read them in that exact order. They're great books. And then once you read those 3 books, it should lead you into the Bible of Investing, which is Security Analyst by Benjamin Graham and David Dodd. Now, that's just the first part of this video, because this right here is the second most important part of this video, which is basically, Tommy, what are you currently using your money to basically invest into? The answer is, I gotta be honest, guys. I'm very transparent. I'm not doing anything differently than I was a year ago or 2 years ago. I'm still investing the same 20% into my boring investments that are ETFs and also my index funds. That's all I'm doing. So if you're ever curious about, Tommy, well, what do you invest your money into? I have a link down below to M1 Finance. When you click it, it shows you exactly what I put my money into. Now, here's the big thing, just so you guys know and you guys understand everything. If you're ever curious, Tommy, what do you invest your money into? I want you to go ahead and you screenshot this picture because this is basically my investments. It's exactly my strategy. It's exactly what I do. I'm not hiding anything. Now, Tommy, why aren't you right now investing into individual stocks? Why aren't you right now putting extra money, for example, into your boring investments at a discount? Well, the answer is very simple. First of all, most of my capital, my money, is going towards my remodel for my home because my safety and my foundation are very important to me. So I want to get that done first. And that home was bought in cash, remodeled in cash, have no payments on it. That's going to be mine fully. That right now is my priority. So in the meantime, I'm only investing 20% of my income, and that's basically it. That's the first reason why I'm not putting money into my regular portfolio at a higher amount. Second thing is, Tommy, why are you not picking stocks right now? I'm spending, honestly, around 7.5 hours to 8 hours per week learning about stock picking. Just learning how to understand the whole thing. So whenever I invest into a company, I really comprehend everything I'm actually doing. So there's no speculation on just me saying, hey, the price is this much. They have so many employees. Like, it used to be like this and like that. So it got to be going up, okay? It's always going up. Everything's going up. There's Elon Musk. He's such a good, CEO. So, and Tim Cook, they're such great CEOs. So they got to do a great job. That's all speculative stuff. To be able to dive into the company financials and say, hey, I know the true value of this company, it takes a lot of work. So that's what I'm currently studying. But I promise you guys one thing. Even once I'm done with my studies, which should be by the end of this year, it takes that much work, guys. I spend like around 7.5 hours, 8 hours a week, but per day, I'm barely getting through 16 pages because it's that complicated. But even then, I'm learning so much and I'm understanding so much, so it's definitely worth it. The hardship is worth it. However, though, even when I do learn how to do all these things and I understand it completely, I'm going to tell you when I invest into a stock 100%, subscribe to the channel, but I'm also going to tell you to learn it yourself because You don't know when I'm gonna make a change. And maybe the video doesn't come out on time and then you might be lost. So it's very important you learn to do things on your own, all right? That's super, super important. Now, the last part of this video is this, okay? Tommy, okay, the investment part, which is picking companies, that's very hard to do. But what if I'm doing what you're doing, which is basically just picking ETFs and index funds? How much money should I be investing into it? And is right now a good time to get started with $1,000 or $10,000? The answer is absolutely. I mean, investing right now into these boring investments is basically getting in at a very low price relative to what the price used to be. And since we are investing based on averages and history when it comes to ETFs and index funds, you're actually getting in at a really good time because it's very low right now. So that's awesome. So yes, if I was just getting started right now would be the perfect time. But here's the thing. It's kind of like, for example, you're going to go on this date, right? And you go on this date with this amazing, beautiful, gorgeous woman, and it's the woman you want to marry. But you go on just one date with her, you never call her back, and you never follow up. That's pretty stupid, right? Because you want the girl to marry you. But overall, it's the same thing with investing. Even if you just put in $1,000 and that's all you did, that's not what you want to do. You want to keep following up. That $1,000 or $10,000 is not going to make you rich, bro. So what you want to do is, yeah, you invested that much money, great, awesome start. But you also want to make it a habit. So invest 10 to 20% of your money on average whenever you get paid every month and put that money in your investments automatically. So that way it keeps growing and growing and growing. And then when the time comes, you get what you want, which is a lot of money in that account to basically live off and enjoy passive income. Now, if you made it all the way to this point in the video, I want you guys to comment down below, Sprite. Now, the reason I always ask you guys for a random comment is because I want to know if you are a real person, because there are a lot of fake comments and so on. And comment down below that, plus, for example, your comment, and I answer all the comments. But I got to know it's real before I answer it, okay? So that's why I always say it. And this way I also know if you made it all the way to this point of the video. But there's this final example I want to give you guys about picking stocks, okay? And here's the example. When I was, for example, in the business of flipping phones, so I would buy phones, obviously, and I would sell them for a profit. I would always find someone that thought that just because they paid $1,000 for the phone originally, that they couldn't sell it right now for $300. But when I told them, hey, although you paid $1,000, and I get that, understand that, the phone is like 4 or 5 years old. And right now, it's selling for like around $350. So the reason I'm offering $300 is because I have to make a profit. That's the idea. And they would say, well, what if I sold it to you for $340? Like, would that be fair? The answer is no, because I got to make a decent enough profit to justify me investing into it. And if the price changes, I have to have a margin of safety to make sure that everything is fine and that my analysis is basically correct. So the same thing goes on when you're picking a stock. When you're buying a stock, you got to know what the true value is. You got to buy below that so you're actually safe and you can actually make a reasonable profit. And when it goes back up to what the true worth basically is, that's where you sell. Because if you hold on to something past its actual value, then you're speculating. That is the idea. In other ways, or other words or letters or whatever you want to call it, it's like, for example, seeing a beautiful woman, which looks amazing, looks great, and you're like, that's the girl I want to be with. But not taking a look at, for example, her character, what she likes, what she believes in, how she is with money, how she doesn't even want kids, like all these other things that actually matter to you, but you don't know anything about that. You're just judging based on her appearance. That's never a good thing for long term, at least, okay? Maybe the short term in the long term, okay? Long term stuff. That's what I'm worried about with everything, okay? But guys, that is it. That's all I have to give you. And I just hope this video reaches you the way I wanted to reach you, because if it does reach you that way, it's going to help you so much. And it's going to help you understand that to pick stocks, you got to learn what you're doing. If you're going to invest right now into boring stuff, it's a great time, but don't stop investing. And lastly, the most important job of an investor is not to lose your money. So don't listen to people that tell you that, hey, you know, just put $100 in or $1,000 in. It's no big deal. No, if you lose that money, it is a big deal, because the job of an investor is to preserve their capital. You know, there are some games on this planet that you can play with no risk. Like going on a roller coaster, which is scary or whatever, it's fun. Because although it's scary, you know the risk of you losing your life is like 1 in a million, right? So you go on it, you're scared or whatever, but you're still gonna do it. No big deal. You're done in like a minute and a half, okay? But when you play with money and you don't know what you're doing, it's fun. It's still fun, right? But when you lose your money, it's not a joke because you work hard for that money. And now it's double hard to invest that money because you need to make your money back some way by working usually. And it's just a terrible thing. This game of investing is fun, but it has real life consequences. So the lesson is here, don't be afraid to not participate until you're ready. So if you know you want to be a stock picker, well, learn that art first. But if you know you want to be a born investor, get in right now and make it a habit because you don't need to really know all the details. You know what I mean? So that's it. Thanks for watching. And as always, like, subscribe, hit the bell so you're notified, comment down below any questions, and don't forget to comment down below with your comment sprite. That way I know that you actually watched until this point and you're actually a real person, okay? But thanks for watching, guys, and long-term team officially out. More videos here. My face is here. Subscribe, and peace.